Hi, this is Robin Hart of the Home Loans with Hart team of CMG, and this is our weekly Market Watch video for those inquiring minds who want to know a little bit about mortgages and rates and see what's happening out there in the mortgage industry. Let's dive in. It's kind of a quirky little time right now. And for the first time since I can remember, we have a crazy little weekend. We've got today, Friday the 13th. Monday, we have President's Day, which most banks are closed. And then squeezed in between, we have Valentine's Day. So lots to celebrate, lots to go for. All right, now let's check out where rates are. Now, keep in mind, we report on 7-day averages from over 200 lenders across the United States, as reported from Mortgage Nuggets. The 30-year fixed is at its lowest levels in a year, came in at about 6.1% on the 7-day average, while the 15-year fixed came in at a 7-day average up by 0.69%. The 30-year VA and FHA came in around 5.67, which is kind of cool. Now, great news. Again, lowest point in a year. Now, why are rates declining? Yeah, got some jobs data discrepancies going on this week. So now keep in mind, mortgage rates have slipped, but more like a slow fall into a pile of molasses. How about that? They basically have moved a little bit. For the first time, they moved downward in 3 weeks, but have remained pretty much in the same kind of range and ballpark for the past month. Now, what's happening in the jobs data market? Well, from private sectors versus BLS, which is government sector, we're getting some wildly contradicting information about the job market. Now, private sectors, here's the deal. People like companies like ADP, they report in because they report based off of the information that they receive on payroll information. So what they're seeing is a contracting employment market. And what that means is that it's harder to find jobs, harder to get jobs, harder to keep jobs, and basically jobs aplenty or not. Okay. Now, where's the government data? Well, they're brandishing and polishing their models on jobs and saying jobs are aplenty and growing. So where's the difference? Is the government lying to us? Is the private sector lying to us? Well, here's the difference, the way they calculate data. And let's kind of backtrack and kind of state what happened. A few short years ago, during the first Trump term, they made a decision to combine part-time and full-time job growth in the same data set. So what does that mean? Basically means a kid delivering pizzas at a job at Domino's, delivering pizzas over the weekend counts as the same as a full-time professional working for, say, a technology company earning $200,000 a year. Now, does that equate? One works 12 hours, one works 40 hours plus. Now, it kind of pops greatly when considering whether or not the job markets are good for long-term growth. But also consider this, we're full-fledged into the gig economy, where some people have 2 and 3 and 4 part-time jobs. I know several people that are working like at a restaurant on the weekends and bartending, and then they also have their daytime job. They might even pick up Lyft or Uber. Now, here's the thing. If they have 3 different jobs that they work at part-time, that counts for 3 jobs versus one job that's not even full-time on the private sector from ADP. So the difference pops greatly when considering what data you enter into. Now, here's the thing, long-term growth, part-time jobs don't usually pay as well, and they also aren't usually for full long-term growth. Also, when people look at the details, they don't care about the data, they care about what's in their bank accounts. So I guarantee you the bank account information looks different for the person with the full-time salary job versus somebody working several part-time jobs. It's definitely not the same. All right, what else is influencing rates? Well, inflation. Inflation data is cooling. Now, what we're finally seeing is kind of processing and filtering in some of the tariff information that we've been listening to on the nonsense side for months. So here's the deal. Cooling inflation has helped more than anything on cooling of mortgage rates. So we bring down inflation, which is the enemy of mortgage rates. Current inflation rate is now at 2.7%, slightly elevated from what it was previously, but for the long-term trajectory, we've pretty much been at a 12-month average of 3.27, which is an elevated level. So it's going in the right direction. The Fed's favorite target to be on target for inflation is at 2%. So we're still at slightly elevated, but it is coming down. And it's going to be stubborn and hard to bring it down to that 2%. So we either need Fed to agree that it's okay with 2.5, 2.7%, but they've had this long-term trajectory and target of 2% for over 45 years. The Fed doesn't like to budge. So we'll kind of see where that's headed, but in the long term, still coming down slowly but surely. Now, rumor has it, here's the thing. I listen to podcasts. I hear a lot of nonsense about how, you should just rent and not own. I'm not really sure that's the case, but here's the thing. I've heard the rumors. Several podcasters say it's cheaper to rent than own. Finally, we hear from someone that is a renowned American financial expert. He doesn't work in selling homes. He's not a realtor. He's not a builder, nothing like that. He doesn't work in the mortgage industry. His name is David Bach, and he joined Stephen Bartlett on The Diary of a CEO. David Bach makes the case for homeownership being a part of your savings and investing mindset. I love the way he illustrates how being a homeowner makes a difference in your net worth. So, who is David Bach? Well, he's actually a speaker, author, and television personality, and an entrepreneur. He's also a self-made millionaire, so you might want to listen up if you're not a self-made millionaire yourself. You will also most likely recognize some of his book titles. All of his books are New York best time selling books. So his entire resume and career is helping everyday people win at the game of life when it comes to money. So check it out on his books. You can get them at Half Price Books, Amazon, or even your local library. Doesn't matter. Check it out. Check out the podcast too. That is free. Now let's dive into some fun stuff. So every time I hear on the news coming out of Washington, D.C., most of us kind of groan, it kind of makes you nauseous, and we're sick of it. So it's usually not on the happy pages of this video, but here we go. It's always a first time. So here we are. For the past 15 weeks, a monk has been on a walkabout for his own self, and actually 18 other guys. So for the past several months, a group of 19 senior monks have been on the walkabout, and basically it's known as bhikkhu. Now, everybody will probably realize how badly I'm tearing up these names, but they left the Huling Dao Vispana Bhavana Center out of Fort Worth, Texas, which is local, all right? They walked 2,300 miles across the country to the nation's capital for the sake of peace. Now, these 19 men came from monasteries around the world, from Buddhist monasteries, and they wanted to partake in a long practice tradition to spread peace by walking long distances. The word vipassana refers to a practice of meditational breathing taught by the Buddha, and one which then Panakara taught at Dharma. So guess what? While they've been doing this 15-week journey, they've also been giving talks along the way about meditation. Now, many Americans, such as myself, have been completely captivated by their devotion and steadfast work as they've trekked across the nation, while also teaching the benefits of meditation. So here's the thing. I personally meditate. I can personally attest to the benefits of it. And I think our country needs a little less noise, a lot more silence, and more stillness. So go monks, very proud, and we should learn. Okay, that's it. Be curious and learn. All right. So, and for our mortgage meme of the week, here it is, Friday the 13th, y'all. Jason says he wishes you a happy Friday, and he'll be back tonight to tell you a bedtime story. So I love that. All right. Definitely sick. But okay. At the end of every video, if you're curious about when the best time to buy or refinance is, well, it depends on you. Give me a call, DM me, doesn't matter. Let's chat it out and see if you're ready to take advantage of available deals on the market. So, if you like this video, please follow us on any of our social media outlets. We're on LinkedIn, Facebook, YouTube, and the artist formerly known as Twitter. I'm Robin Hart with the Home Loans with Hart team of CMG. If you like this video, please share it with others. And other than that, have a great weekend. Hope you have a fabulous Valentine's Day. Enjoy your day off on President's Day if you get it. And hopefully luck is with you on Friday the 13th. Have a great one. Bye.